Let's start with Amazon. Obviously, there has been a big turnaround story, but we just saw UBS cutting the target of Amazon to $253 from $272. It maintains the buy rating. What has been happening today brought the stock down as much as 2%, but it's still underwater. Of course, Amazon says it was never under consideration to display the cost of tariffs on products. What we saw earlier today is reporting that this was indeed the case. And the White House press secretary said that this is a hostile act. And obviously there is a lot of volatility with the stock. And we saw retailers like Shein, we saw Temu, we saw a lot of discussions of how are they going to display those prices. And that is really an important thing for consumers. We saw that the questions at the press conference was like, does that mean that consumers will indeed pay more? So a lot of pressure there. The stock is still down for today, but of course, a lot of the earlier losses are reversed.
Yeah, and you mentioned Raymond James downgrading the stock head earnings,
yeah,
right?
So UBS, downgrading.
Yeah, so just like a double whammy there.
Yeah.
Shopify, what's going on here?
Yeah, with Spotify, shares stumbled as much as 8% in earlier trading. Some of that losses have reversed. The streaming company reported operating profit that missed estimate. That said, the report wasn't bad. We saw a big gain in subscriber, which was way more than analysts expected and the company predicted. The subscribers reached 268 million, which is a 12% increase.
That's amazing.
Yeah, it's really good. We know the company has been pushing into audiobooks, podcasts, even video content to compete with YouTube. But of course, that has come at a price. We know that they raised their subscriber fee to $12 a month, but that has been helping. The stock is up 25% year to date, despite the pressure we have seen today. Still a very strong year after 2 years of more than 100 gains.
All right, anything else?
We have UPS. The stock is down today. We're seeing some pressure. Even in earlier trading, we saw some gains. The company expects to cut 20,000 jobs this year as it dramatically reduces shipments. Again, we were talking about a lot of pressure from the administration. The industry is grappling with new challenges. Of course, the tariffs. They have really complicated the cross-border shipments. And UPS is a very good gauge of how things are changing. UPS aims to cut expenses, improve profitability. And the network reconfiguration is expected to generate about $4 billion in cost savings. So that's definitely some relief. The stock has stumbled about 23% year to date. So the small gain today is a little bit of relief.
All right, Denitsa, thanks a lot. Denitsa Sakova joining us there. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.